Hey, Think Realty, thanks so much for joining us today on the podcast. We're live on site at one of our events, and always excited when I get to do live interviews versus Zoom interviews. It's so much more fun. We've got a great interview for you today. I want to say a quick thank you to our podcast sponsor before we jump in. Today's episode is sponsored by CV3 Financial Services. When you're taking on a new investment project, having a trusted lender is key. Count on CV3 for your fix and flip, rental, cash out, or rate and term refi needs. Visit cv3financial.com/think realty. That's cv3financial.com/think realty. As always, many of you guys know my story. I'm third generation real estate investor, and I always want to bring just resident experts content to you that maybe you've never heard before. I, as a third generation real estate investor, had so much opportunity to sit around the dining room table with my dad and my grandfather and others. They got to talk about all these various types of investing. And today we've got a special guest, Michael Poggi. Very good. Glad you're here.
Thank you for having me.
Yeah, I always appreciate you coming on. And Michael has a very unique strategy. And I think that this one is important because with the way the market's moving, this is one of those strategies that I think is an evergreen strategy that no matter if the market's up, market's down, it's a strategy that I think works in just about any type of economic situation. So if you don't mind, tell us what you do, and then we'll kind of jump into what that strategy looks like.
Sure. So our main business is to help investors to find quarter-acre, buildable, vacant lots in fast-growing resort communities. Mm-hmm. And the reason why is those are the ones that seem to go up the best. Sure. and sell the easiest later on down the road. Mm-hmm.
So you go into these fast-growing resort communities, and you buy vacant lots. These are already subdivided. They typically already have underground water, sewer. They're
all well and septic.
Okay.
Yep, and they're pre-platted from many years ago. So I buy them from individual people who we're maybe not considering selling, but we send them an offer.
Yeah, and so you buy them low, off of maybe somebody that's just been sitting on something for a while. And then the strategy on these is to then hold them for what type of period of time?
It depends. Every person's different because some people are looking to generate cash flow monthly. So they end up selling them sooner, maybe 3 to 5 years, and then they have passive income coming in from someone that's going to pay them over 5 or 10 more years, 10% interest.
Yeah.
Other people actually buy them in the place of their mutual funds, in the place of their stock portfolio, because they feel that lots are safer.
Sure.
They also feel like that they probably will go up more. And then when we do have a bad real estate market, vacant lots seem to hold value where houses may come down and commercial real estate comes down. But the vacant lots seem to hold their value because no one's rushing to go sell them right away for a low price lot. So during COVID, I didn't lose any money, but I didn't make any money during COVID. But after COVID, they doubled since then.
Right. Yeah, it was. I think that was the case for so many people. I know I owned a lot of vacant lots in Cape Coral.
Me too.
And
I remember
bought
that.
A lot there. And after COVID, they took a little bit of a dip. I didn't lose any money, but afterwards it came back with a
Real
vengeance.
strong.
Yeah, I mean, I had lots that I bought for 20, 30 grand. They were then worth 150, 200. It was wild, the appreciation there. And I think that that's kind of your point, is like, if you can buy and sit on this for a while, then there's a high likelihood that land is always going to increase.
For sure.
It's that old adage that buy land because they're not making any more of it, right?
Yes.
And so when you think about this strategy, one thing that I heard you say was you can gain passive income by having somebody pay you 10%. So are you basically owner financing or some sort of lease option to a new buyer and then taking interest rate on it versus taking cash? Is that how you're finding that?
Yeah, so if someone says, Mike, I can't afford to buy them in full, or they actually want to stretch themselves and they want to use seller financing, then I don't mind, because for me, I have the cash to hold those lots.
Sure.
So if I carry someone at 10% interest, then I can always sell the note if I needed to cash out. Right. So I just hold them for 5, 10 years. Yeah. And if someone wants to pay it off sooner, it's no problem. There's no prepayment penalty, so it's pretty easy. Yeah.
So many of our viewers, listeners, also are heavily involved in self-directed IRAs, right? In the self-direction space, whether it's their Roth or their solo or their traditional. And I love the idea of land inside of your self-directed IRA. Yep. And I'm sure that you see a lot of people doing that.
About 95% of all the investors that I help are using their IRA or old 401k plan and rolling it over into a new self-directed Roth. Yeah. And then they end up loading up their portfolio with vacant lots in the place of mutual funds or even annuities or bonds for that matter.
Right. Yeah, what I love about that is that when, if you've ever tried to get involved in creating a new, let's say a self-directed Roth, I think your contribution limit's maybe $7,000 or something like that a year.
$7,000.
And so, it takes you a year or two to actually get enough money in there to do anything with it.
Yes.
But then most investments you're getting into, if you want to get into apartment syndication, like minimum's typically 50 to 100. So now you got to wait, 5-6 years worth of contributions to actually invest. And so what I love about what you do is that the barrier to entry is a lot lower, so they can actually get that money moving faster.
Yes.
What's the typical lot purchase that you're making?
Below $20,000.
Yeah.
So below 20,000 is what our criteria is, and if they're above 20,000, then we go to a new subdivision.
Yeah.
We try to buy low.
I know that you've bought kind of all over, and you usually have a concentration in an area. Where are you guys concentrated at right now?
We focus in one of the most beautiful resort communities called Bella Vista in Arkansas, right next door to Walmart's headquarters.
Okay.
So what happens is that you've got Walmart executives living on the lakes and the golf courses, and Tyson Foods executives living on the lakes and golf courses, and then the regular common workers are living in the regular homes in this resort. So it's loaded with people because it's right next to all of the world headquarters for some of those biggest companies.
Okay, very good. And so it's very strategic in the fact that you went in there. And what type of volume? Do you still have enough volume that there was quite a few people that want to pick up some lots? You still have some volume there?
Yeah, the subdivision is so big. It's 65 square miles.
Wow.
So it's the size of Fort Lauderdale.
Right.
Huge.
Yeah.
And that means that there's thousands of lots to make offers on. And if I make offers high enough, then I get some yeses. If I make offers too low, then I wasted money on postage and everything else. So the key is to make offers in the right price range, which I'm good at because I know it so well. I do it every single day.
Yeah. Once you kind of move out of that area, is there a future thought of where you might go?
There's some other similar areas, but again, they're still at the beginning stages where even though there's already some homes built in there, there's just not as much activity, which is okay, but I would rather be in the area that is absolutely having so many permits being pulled, roads getting widened, houses going up every day, churches going up, schools going up. That gives me a chance to make some money right now.
Sure, yeah. You kind of have an end in sight.
Yes.
Very cool. Instead of being very speculative and hoping that, it starts to take off.
Yes, correct.
How long have you been doing this?
28 years.
Yeah, I know it's been a very long time.
Yes.
And I know you've helped hundreds of investors.
Yes.
Yeah, which is great.
And then once the investor has part of their portfolio in vacant lots, they still have extra money left over.
Sure.
And then I suggest other things, whether it's new construction or syndication or something of that sort, to help diversify them and give them shorter term investments rather than only long term.
Let's talk about the market right now for a minute. I know a lot of investors have just sat on cash because they're nervous about the election. They're nervous about whatever.
Yes.
While I'm very, very bullish in real estate, and I always say, no matter what the market is, if you have the right mindset in real estate, you should always buy real estate. And they always say, well, when? And I always say, as fast as you possibly can.
Now.
Like my first property I bought at 24, at 13% interest was still one of the greatest investments I ever made, because of appreciation, tax benefits, so on and so forth. And so it's like, I just think people get such a consumer mindset by listening to mainstream media that they miss out on these opportunities. And so they sit and they wait. You talked about a little bit of how land does through up times, down times. Let's say the interest rates drop, which they have the last 4 election cycles, by the way. And then prices in houses go up, which they have, by the way, in the last 4 election cycles. So pretty safe bet this is probably what happens. What happens to vacant land?
It's really all depending on how many builders are building houses in that subdivision and how fast that they're trying to scoop them up. So when everybody's fighting over them like a frenzy, then everybody's bidding on the same lots, and then they bid up faster. If there's less activity, less permits being pulled, then the lots will probably remain the same.
Yeah, my belief is that interest rates drop slightly. Powell came out and said that, and then what happens is then people that have been waiting, they jump into the market. There's only 2.5 months worth of inventory sitting on the MLS right now, which a healthy market has 6. So there's just not enough inventory.
Correct.
And so now these people jump in. Well, what happens now is prices go up.
Yes.
And so then what happens when that takes place, which this happened, post-COVID, 2021, 2022, is then all of a sudden a bunch of new building permits get pulled, right?
Sure.
Because there's just not enough inventory. Like, new home builders know this frenzy's coming. Even some of them are starting to buy lots right now. Your big publicly traded ones are showing their cards by buying lots right now, believing that there's not enough inventory, that price is going to jack up. So now building becomes actually a more responsible pathway into home ownership. And so it seems like, if I were just, obviously neither of us have a crystal ball, but it sure seems like there's going to be a massive emphasis in Q1 of 2025 on building new homes.
Well, plus that rental rates are so high,
really high,
that people would be better off owning a home.
Yeah.
So with that in mind, builders know that, and they're building like crazy because they're getting people out of their rent and putting them into a mortgage.
Right.
And that's giving them a big savings plus the tax write-off. So that's why vacant lots are still absolutely smoking hot now, and they will be for quite a while unless we have some major correction where builders completely stop building.
Yeah, which I just don't know how they can. Right. Like, we're 2 million plus.
Well, there's a housing shortage too.
Massive housing shortage.
So we're building homes in Branson, Missouri, Wichita, Kansas, and then also in Bella Vista, Arkansas. We're just about to start pulling some permits in there to build houses on the lots that we own.
That's awesome. Yeah, I don't see it's no matter what the pundits say, it's basic supply and demand. There's not enough supply. There's too much demand. Basic economics say if you can find the right price point, people are going to buy. Like, that's just the nature of where we are. Very good. I love that. I love that you've been kind of the captain of this ship, talking about vacant land for 28 years, and appreciate you doing that and being such a service to both the Think Realty viewer and listener. Michael is a resident expert, is always there to provide a lot of content and information, and appreciate you speaking at the conferences. I know you're speaking today.
Yes.
Very, very good. Do you mind just sharing the book that you have?
Sure. This is on Amazon. It's called Build Wealth Tax Free. And it has a lot of my secrets in there, some of my failures when I first started to invest in vacant lots and the things that I did wrong. And it talks about what I do correctly and how I fix those problems, and now how I've got an absolute multi-million-dollar machine going to be able to grow your wealth or anyone else you know.
Yeah, very, very good. Awesome. They can get that book on Amazon?
On Amazon, Build Wealth Tax Free by Michael Poggi.
Okay, very good. Michael, thank you so much for joining us today. Do you have website, social? How do they get a hold of you?
Probably the best way would be to go to our website, which is themillionairesgroup.com. So www.themillionaires with an S group.com. Phone number too, or no?
Yeah, go for it.
954-258-6954.
Very cool. They can reach out to you there.
Yes, sir.
And highly encourage them to get a hold of you. I think it's a great strategy. As always, I appreciate what you bring to the community, appreciate what you do for real estate investors, appreciate you and your family. And one of these days I'm going to get down and see your farm that you've got.
The zoo.
Yeah, I'm going to go see the zoo pretty soon.
Yep.
So appreciate it. Thanks so much. Have a great day.
Thank you so much.
Thanks so much for being a part of the podcast. I want to say a quick thank you to our sponsor again, CV3 Financial. When you're taking on new real estate investment projects, having a trusted lender is key. Count on CV3 for your fix and flip, rental, cash out, or rate and term refi needs. CV3financial.com /Think Realty, CV3financial.com /Think Realty. And a quick plug at the end that if you haven't already joined our Think Realty Plus program, the Think Realty Plus program is $14.99 a month. It's the most expensive thing we have to offer, but what it does is it really just allows you to be a companion to us and us to you to bring you great information, great people, great story, great content every single week, month, year, and we just want to be along with you for your ride in real estate. That $14.99 a month gets you access to every one of our conferences. It gets you the magazine on your doorstep. It gets you access to our resident experts on the monthly calls, as well as access to the online website and all the good discounts and stuff like that we have there. So if you haven't already joined, go to thinkrealty.com, use the code LAUNCH, and that'll get you to the $14.99 program, and we'd love to have you join Think Realty Plus. We'll talk to you soon. Thanks so much, as always, for joining the podcast.